Hello everyone, welcome to Options with Doug, streaming live daily on Bookmap Discord and the Bookmap YouTube channel at 1:30 p.m. Eastern Time. Before I get started, I need to go through the disclosures. General disclosure: all Bookmap Ltd materials, information, and presentations are for educational purposes only and should not be considered specific investment advice nor recommendations. Risk disclosure: trading futures, equities, and options involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. Here's my contact information. The best way to get in touch with me is through Discord. My name on Discord is Doug P. Also on Bookmap Discord, there's an Options-Doug chat channel. That's a great place to post questions, comments, and content related to the topics of my presentation and the topics of the channel that I'll go through in just a moment. And note that Bookmap Discord is a very large, great community of active traders. There's a wide variety of content there on a variety of asset classes, stocks, options, futures, crypto, and also in a wide variety of languages, and a group of traders that are working together to help each other become better traders and learn more about how to use Bookmap. I'm also on X, formerly known as Twitter. My name there is @Pless. Here are my key tenets for trading. And first, number one, options trades and market maker hedging activity are key drivers of price in many stocks and futures. And the stocks and futures that I watch, they are definitely, options traders are definitely key drivers of price action. And for the S&P 500, SPX is the underlying index, and SPY is the ETF version of SPX, and ES is a derivative of SPX. So when traders buy and sell puts and calls in SPX and SPY, market makers hedge their delta exposure with ES futures. So for example, if traders are buying SPX and SPY calls, market makers sell the calls and they have to buy ES futures to hedge their delta exposure. Likewise, for the NASDAQ 100, NDX is the underlying index, NQ is a derivative of NDX, and when traders, and QQQ is the ETF version of that index, and when traders buy and sell puts and calls in NDX and QQQ, market makers will hedge their delta exposure with NQ futures. The focus of my presentation today and the focus of the Options-Doug chat channel is options order flow, the impact of options markets on stocks and futures, and the influence of market maker hedging flow on price action. I have a two-step process for trading, and the first is positional planning, and I use positional analysis. I look at how traders and market makers are positioned in the options market and how those positions change from day to day to develop a thesis regarding the expected trading range and volatility for the day, as well as the directional bias. And first of all, I use positional analysis because I think it is forward-looking. How market makers position, how traders and market makers position themselves in the options market indicates whether they are looking for and expecting and positioning themselves for higher prices or lower prices. And I'll talk about some examples of that in just a minute. And again, I think this is forward-looking as opposed to other forms of analysis. So this is exactly what I'm going to do today. I'm going to look at how traders and market makers are positioned in the options market for the S&P 500 and NASDAQ, and how those positions change from Friday to develop a thesis, bullish, bearish, and also get a sense for the expected trading range for the day. The second step in my process is execution. I look at real-time order flow in Bookmap and real-time market maker hedging flow in Spotgamma Hero to confirm my thesis. And when I talk about setups today, I will be talking about setups in an underlying asset. So I'm using this execution process for setups, and I will be looking at an underlying asset, and setups in those assets can be taken any number of ways, For example, the S&P 500 setups can be taken with ES futures, SPY shares, SPY options, SPX options, or even ES options. Questions and comments are welcome, and I will be watching both the Options-Doug chat channel and Discord, as well as the chat and YouTube for your questions and comments. Please feel free to post, and I'll do my best to answer your questions. And hello, Caesar, welcome, glad you're here. Hello, Stephen, welcome, glad you're here as well. All right, here's my agenda for today, Tuesday, February 20th. First of all, I'm going to go over news items, economic data, events, and earnings. Then I'm going to go through my positional analysis. I'm going to do exactly what I said, go look at levels in play for today, and then I'll take a look at how these levels have changed from Friday. Then I'll review some setups using these levels that happened earlier today, and then I'll take a look at the live market. And when I get to the live market, if anyone has any stocks they want me to take a look at, please let me know and I'll be glad to do that. All right, let's get started with news items, economic data, events, and earnings. So it's a pretty light week, but there are two key events, both tomorrow at 2 p.m. FOMC minutes are released. And then the big event of the week, and everybody's talking about NVIDIA. NVIDIA earnings, NVIDIA reports earnings after the market closes tomorrow. According to Spotgamma, the expected move is plus or minus 9.65%. Then on Thursday, there is some data coming out, 8:30 a.m., jobless claims, and 9:45 a.m. PMI data, and then a variety of Fed speakers throughout the week. And I will take a look at NVIDIA for sure. All right, let's move on to positional analysis now. I'm going to start with the S&P 500. This is the ES futures in Bookmap. And before I take a closer look at this chart, I do want to step back and take a look at a larger time frame. And I'm going to go to the underlying index, SPX. So let's start with a one-day chart in SPX. And very quickly, the current rally began October 30th. And from low to high was good for about 940 points. Currently, some consolidation going on. All right, so this is a one-day chart. Now let's zoom down in time frame, look at a 1-hour chart so we can get a closer look at the levels in play. This is a 30-day 1-hour chart showing the top of the trend. And let's start with the last expiration, the January 19th expiration right here. This was bullish in a call-dominated expiration. A little bit unusual. Usually there's some consolidation after a call-dominated expiration. And the SPX broke out above the 4,800 level and has continued all the way up to around 50-50. Call walls have gradually moved up, some up and down, but right now the call wall is at 5,100. So the call walls in starting early this year have ranged from 4,800 all the way up to 5,100. All right, let me point out levels on this chart. First of all, the dashed purple lines are showing the lower and upper weekly expected move. This is based on the options market. I update this once a week over the weekend. So SPX is still trading above the lower weekly expected move. The dashed blue lines are showing the lower and upper daily expected move. And SPX is trading below the lower daily expected move. This is also based on the options market, and I update these this daily level once a day. This is based on the close for the previous day, and I do post these numbers in Bookmap Discord every day in the Options-Doug chat channel. All right, those are the expected moves. SPX trading below the lower daily expected move. The other lines on this chart are showing Spotgamma levels. These are proprietary Spotgamma levels. They're provided to Spotgamma subscribers. They're shown on a variety of trading platforms. This is Thinkorswim. I'm going to point out the key daily levels. First of all, here's the put wall. That's at 4,500. That's a strike with largest net negative gamma that can be expected to act as support. That level did move down pretty substantially from Friday. And note with Friday expiration, a lot of that gamma has expired, so it typically takes a few days the following week after expiration for the levels to settle into more permanent homes. So the levels, I anticipate the levels moving around quite a bit the first couple of days until they settle into more stable levels. All right, the next level up is the volatility trigger. That's at 49.95. So that's way up here. And then a Spotgamma's proprietary gamma and volatility flip level. Below that level, market makers' position on the gamma curve is negative. In a negative gamma environment, market makers have to trade with price to hedge their delta exposure, and that tends to enhance or increase volatility. On the other hand, above that level, market makers' position on the gamma curve is positive. In a positive gamma environment, market makers have to trade against price, and that tends to subdue or decrease volatility. And note that SPX is trading below its volatility trigger. Started out in a negative gamma, a positive gamma environment at the beginning of the day, but now trading below that volatility trigger. Next level up, just above that, is 5,000. That's the absolute gamma strike. That's a strike with large absolute positive and negative gamma. So that's where most of the gamma-weighted open interest is concentrated, and that absolute gamma strike has been at 5,000 for quite some time. Then, as I mentioned before, the call wall did move up to 5,100. That's a strike with large net positive gamma, and that can be expected to act as resistance. So the call wall moved up, the volatility trigger moved up, and the put wall moved lower. All right, let's take one final look at SPX. I'm going to go to a 1 minute chart just so we get a closer look at the levels in play for today. So this is starting last Friday, this reversal Friday afternoon, options expiration, and a call dominated expiration. Calls starting to lose value, price moves lower, and market makers can sell their long futures hedges. And that move lower continued today. The S&P 500 gapped down lower and has traded earlier today up and down around this 49.76 gamma level, and just below that lower daily expected move. All right, let's go to Bookmap now. All right, in Bookmap, I have my own cloud notes, so I can show these levels. There's the 0 gamma level acting as resistance today. Good entry points for shorts that I'll talk about in a few minutes. Here's the lower daily expected move for ES. Then I also have SPY levels on this chart. Here's the SPY 498.0 gamma level acting as a great entry point for a short just after the open. I did post this setup in Discord this morning. All right, so I've shown the SPX levels on the SPX charts. Now I have moved them over to my ES charts. Again, key levels in play, 49.76. SPY levels, 498, 0 gamma level, 497, large gamma 3 level. All right, so these are the levels where gamma weighted open interest is concentrated, and typically these levels can act as support and resistance. This is where traders and market makers are likely to react, and these are the levels where I want to trade. And we'll talk about setups in a few minutes. All right, so for the SPX, volatility trigger call wall moved higher, put wall moved lower, and for SPY, the call wall moved lower. So the call wall down to 500 for SPY. So kind of a mixed picture for the S&P 500, and that was not the case for the NASDAQ. All right, so speaking of NASDAQ, let's move on. Here are the NQ futures and Bookmap. And let's take a look at the underlying index charts before we get to this chart. I'm going to start with QQQ. And I'm just going to go to a one-day chart. This is a 1 minute chart. 1 minute chart. 430 is the absolute gamma strike, acting as resistance this morning. Good entry point for short. Here's the put wall at 425. Price is has traded below that level today. Also the 427 level, round number level, not a Spotgamma level, acting as resistance earlier today. And for QQQ, it was a bearish hat trick, volatility trigger, put wall, and absolute gamma strike all move lower. So that is bearish for QQQ. All right, let's take a look at NDX. Then we'll get back to the NQ chart. NDX, levels in play. Here's the volatility trigger at 725. Acting as resistance. So NDX is trading below its volatility trigger. All right, let's go back to Bookmap now. And note for NDX, all 4 key daily levels shifted lower. So that is very bullish. Volatility trigger, put wall, call wall, and absolute gamma strike all shifted lower. Again, very bullish, bearish. And for NQ, it was also a bearish hat trick. 3 levels move lower. So very, very bearish for NASDAQ. With all those shifts lower in levels, this indicates to me that traders were looking for, expecting, and positioning themselves for lower prices in NASDAQ. All right, let's wrap up positional analysis with a look at gamma notional. This is market maker's position on the gamma curve at the beginning of the day for the S&P 500, NASDAQ, Russell 2000. And note, all these numbers did move lower from Friday, still positive at the beginning of the day for SPX. So in a positive gamma environment, again, this means that traders are short calls, market makers are long calls, hence the positive gamma, and they have to trade against price to hedge their delta exposure. Pretty much neutral for SPY and negative for QQQ. Let's take a look at one other thing now. I'm going to take a look at the animal. What's interesting today. I'm going to go to the SPX. What this chart is showing is market maker's delta notional on the vertical axis and the spot price for SPX on the horizontal axis. There are 2 curves on this chart. The first light gray curve shows how market maker's delta notional may change with changes in price only. And the purple curve adds implied volatility to the equation. That shows how market makers' delta notional may change with changes in price and implied volatility. And the purple curve is what we want to take a look at. Let's take a look at current prices. SPX right around 49.65. Let's locate that on the chart. So that's right around here. So definitely on this left sloping portion of the Vanna model. This indicates that as price has been falling, implied volatility dropping, so price falling, implied volatility increasing, price falling, implied volatility increasing, market makers' delta notional increases, and they have to sell futures to hedge their delta exposure. This is typical of a negative gamma environment. Market makers selling futures as price drops, and if price does increase, implied volatility drops, they can buy back their short futures. So on this portion of the Vanna model here, remember market makers want to remain delta neutral. So in this case, their delta is increasing as price drops, and they have to sell futures to hedge their delta exposure. Let's take a quick look at SPY. SPY right around 496. Also on this left sloping portion of the Vanna model, indicating market makers will be trading with price to hedge their delta exposure. Finally, QQQ. All right, this Vanna model is typical of a very negative gamma environment. There's hardly any slope up to the right. Let's see where QQQ is trading. Right around 425. So pretty far up on this Vanna model, indicating again market makers will be trading with price to hedge their delta exposure, buying and selling NQ futures. All right, let's move on now to execution. So everything that we've looked at so far is based on static data. Again, I'm looking at these levels to see how market makers are how traders and market makers are positioned today in the options market, and how those positions change from Friday, from the previous day. All right, let's see what options traders are doing today. So this is the HERO model, HERO signal. HERO stands for Hedging Impact Real-Time Options. This is from Spotgamma. It's available to Spotgamma subscribers, shown on a variety of trading This is the HERO signal. It's web-based. This is available to Spotgamma subscribers. It's showing real-time options trades. So what this chart is showing is price for SPX with a white line, the HERO signal in purple. That's showing options trades and market maker hedging activity for a combined signal of SPX, SPY, XSP, and ES futures. All right, let's zoom in on this chart. So when the HERO signal is falling, this indicates traders are taking negative delta positions. They're buying puts and or selling calls. Market makers would take the opposite side of those trades, and they hedge themselves with ES futures. So in this case, when traders are buying puts and selling selling calls in SPX and SPY, market makers take the opposite side of those trades, and they have to sell ES futures to hedge their delta exposure. All right, let's zoom in on the morning. The morning was a little bit difficult to read. The hedging flow in the morning was really more typical of a positive gamma environment. Options traders buying and selling, buying dips, selling rips. So more mean reverting in the morning until this final push up right around 11 a.m. and then the hero signal shifted lower. So let's take a look at the morning session. And I did post this in Discord, this first short setup. I'm going to separate out puts and calls. So notice the rising hero signal right at the cash open. Let's see what traders were doing. They were buying calls at the open, shown by the rising orange line. Took their foot off the gas, started buying puts, and price moved lower. And these traders who were buying calls got their face ripped off by aggressive sellers. All right, this is the MAG 7 signal. I'll talk about this more when we get to NASDAQ. This is showing options trades and market maker hedging activity for a combined signal for the stocks known as the Magnificent Seven. That's Apple, Amazon, Google, Meta, Microsoft, Nvidia, Tesla. And these stocks make up a very large component of the NASDAQ 100, also a large component of the S&P 500. And I always look at this signal. When the hero signal is falling, this is showing that traders are buying puts and selling calls in the MAG 7 stocks. And it's hard for the indices to move higher. Let's go back to the S&P 500. I'm going to go back to the total signal. Zoom in again. So really, any of these peaks in the hero signal were good points to sell. Sorry, whenever I switch back from total to puts and calls, it triggers this auto zoom. All right, let's go take a look at Bookmap now. Go back to ES. Going to zoom in on about the first hour and 15 minutes. So remember, from the open, traders started aggressively buying calls. That did not last very long. That's also shown on Bookmap by the green volume dots. Volume dots indicate market buy minus sell. Green dots indicate more buyers than sellers. Magenta dots indicate more sellers than buyers. So as price was rising in the morning, large traders were fading that move with iceberg orders. That's shown by the falling blue line in the subchart there. Also the on-chart indicator. This was also a little bit of a stop run right up to the 49.95 volatility trigger. That is the SPX volatility trigger. There's the stop run shown by the on-chart indicator. And then price reverses lower. So large traders leading the way, fading the move higher with iceberg orders. Then aggressive sellers start to come in. Whoops. Shown by the magenta volume dots, and a very good entry point right around 5005, ES 5005, right at the SPY 4980 gamma level. Note in the subchart I'm showing iceberg orders with the light blue line, cumulative volume delta with the magenta line, and stop orders with the yellow line. I have them all in sum mode. One setup that I like to look for, or some maybe a confirmation of a setup, is when this gap widens out. So what this means is that large traders are selling with iceberg orders, and as price starts to move lower, they stop. They were selling with iceberg orders. They stop selling. Then aggressive sellers start to come in, and also sell stop orders fuel that move lower. So that gap widens out, the move lower, led by large traders selling with iceberg orders. Just a good visual confirmation. All right, so there were some additional entries. All of the levels that I've talked about. First entry, 498, 0 gamma level. Second entry at the SPY 497, large gamma 3 level. Entry at the SPX 4976, 0 gamma level. So we scroll over. And one thing I forgot to mention, there is a difference in price between ES and SPX. And today it's around 14.5. Maybe a little bit less now, maybe a little bit closer to 14. I'm using 14.5. So ES minus SPX is equal to 14.5. So I'm showing the 4970 level, that's SPX 4970 at ES 4984.5. All right, so more shorts. Let me zoom out on this just a little bit. $10.30 reversal, aggressive buyers start to come in, and then that reverses lower right around VWAP, shown by the light blue line. Also, again, that 497 level. All right, so multiple short entry points in the morning at the key levels that I've been watching, and that I have marked on my charts. All right, let's go back to Hero. All right, so at, let's say 11, right around 11 a.m., the Hero signal for the day was positive, slightly positive, 1.25 billion notional value positive, and then shifted lower, and now continues to make lower highs. Traders continue to take negative delta positions. All right, let's take a look at NASDAQ. And for NASDAQ, I'm just going to go to the MAG 7 signal. So I showed this already. Traders were buying puts and selling calls in the MAG 7 stocks. Let's go to NASDAQ and Bookmap. And note the price here is shown for QQQ. Those are prices for QQQ for this MAG 7 signal. Go to NASDAQ. So remember, from the open, traders were taking negative delta positions in the Mag 7 stocks, which make up a very large component of the NASDAQ 100. Just like the S&P 500, there were some aggressive buyers coming in at the open, resistance at the QQQ 430 level. Aggressive sellers start to come in, shown by the magenta volume dots, and cumulative volume delta shifts lower. Then as price starts to move lower, sell stop orders fuel the move lower. Aggressive sellers, sell stop orders, that's shown by the falling yellow line, and also market makers selling NQ futures and also selling stock in the Mag 7 stocks, which again make up a very large component of the NASDAQ 100. Entry points. Here's a little pullback to VWAP in the 429 and NDX 625 level. Short at 427. Note now NASDAQ is trying to make its way up above the QQQ put wall at 425. All right, let's take a look at some stocks. And Slow to Razi asks, is Tesla down 5% with the AI guys because of call gamma unwind? We can take a look at that. At first thought, I would say no. I look at call gamma unwind for stocks that have been driven up, that were driven up pretty sharply last week with call buying, like SMCI. Right, and you pointed that SMCI out on Friday. I showed that, and that was definitely a textbook example of a call gamma unwind. So Tesla, maybe not so much. All right, so let's take a look at some stocks. I'm going to start with Apple. Let's go see what options traders were doing. Let's go to Apple. Apple, note the timely flow alert, getting your attention, indicating significant options activity. And Apple finds support at the 180 put wall here. That's also the key gamma strike and the hedge wall as well. Apple dropped down to that level, found support. Note traders, as Apple was moving down toward the put wall, they took their foot off the gas. They started taking positive delta positions, and price consolidated, found support at that level. Let's go to Bookmap. Here's the 180 put wall, acting as support, very, very close to 180. Note all the liquidity at that level. Those are resting limit orders. Below price, they are limit buy orders. Very typical for stock. Come in at the cash open and stay in the order book until they get filled. So most likely there were some filled at this level, and then more buyers came in at 180. All right, the next is AMD. Very bearish day here in AMD. Let's see what options traders have been doing. Let's go to AMD. Zoom in. Again, traders taking negative delta positions. Flow alert indicating significant options activity. Get your attention. And that occurs right at the 170 key gamma strike hedge wall level. Right around 10:30, traders take their foot off the gas. They start taking positive delta positions, and AMD consolidates. Let's go to Bookmap. 170 key gamma strike would have been a good entry point for a short. Let's zoom in. So note the little pullback to 170. Whoops. Little pullback to 170. Good entry point for a short as traders were taking negative delta positions, and that flow alert went off. All right, let's take a look at NVIDIA. And NVIDIA was down massively today. At one point I looked, it was down 44 points. So big drop in NVIDIA. Here from the cash open, showing down over 40 points. All right, let's see what options traders are doing in NVIDIA. And they were taking negative delta positions from the open, took their foot off the gas right around 12:20, but still not starting to take positive delta positions. Let's zoom in on this so we can see this alert that came in. Let's see what time that was. So right around 9:31, just 1 minute after the cash open, flow alert comes in. Get your attention to take a short, whatever you want in NVIDIA. Sell stock, buy a put spread, sell a call spread. Good entry point here. Let me zoom in a little bit more. On this pullback, and that happens about 2 minutes after the alert, and then NVIDIA starts to make a series of lower highs. Alright, so NVIDIA traders are getting out, taking their profits before NVIDIA reports earnings tomorrow afternoon. Alright, let's go back to Hero. I'm going to separate out puts and calls now. So today traders have been selling calls and buying puts. Calls shown by the falling orange line. When traders sell calls, market makers buy the calls. They have to sell stock to hedge their delta exposure. The same with the blue line showing puts. They're buying puts. All right, let's take a look at a couple stocks in Equity Hub. Hello, Teddy. Welcome. Glad you're here. All right, first, let's take a look at Tesla. See if we can answer Sodarazi's question. I'm going to go with history here. I'm going to look back at last Friday. I'm looking at next expiry gamma percent and also the top gamma expiry. So these are the numbers for Friday. So there was 38.72% gamma expiring on Friday. So that is significant. That's over 30%. So that could very well be a call gamma unwind. Sodarazi, let's take a look at things. So there is some call domination. This is for today, so this is not the same view as it would have been on Friday, but so some call domination above the 210 strike. That's shown by the green on the right, and put domination on the left, shown by the red or the orange. And that's also shown by this shift in the crossover, the orange line call line and the blue line, the put line and the put call impact chart. That's showing that at 208. All right, so potentially some call gamma unwind still going on in Tesla today, but definitely going on in NVIDIA. Again, remember, this is for today, not Friday. Let's go to the history. So what this is showing is for Friday, 53% gamma expiring on Friday. So we know traders have been buying calls for quite some time in NVIDIA, and the expired traders have been selling calls, and market makers are now, as traders are selling calls, market makers take the opposite side of that, and they're selling NVIDIA stock to hedge their delta exposure. And Teddy asks, is this live every day? Where can I find your calendar? Yes, it is live every day at 1:30 p.m. Eastern Time. So I stream live daily every day, Monday through Friday, on the Bookmap YouTube channel, also Bookmap Discord at 1:30 p.m. Eastern Time. Free and available to everyone. let's go back to Hero now. Go back to the S&P 500. Let's go take a look at Mag 7. I'm going to go back to the total signal. So for the S&P 500, overall, hedging pressure continues to the downside. Traders continue to take negative delta positions. Getting a little bit more clarity with the total signal here today. Hero signal continues to make lower highs, lower lows. Let's go to Bookmap. And you're welcome, Teddy. So if anyone, at this point, if anyone has any stocks they want me to take a look at, please let me know and I'll be glad to do that. All right, with the Hero signal falling like it is, I'm still looking for short opportunities. Looks like the 49.70 level might have been a good entry point for a short. Just below that level, a couple times before. All right, Nanny wants to take a look at SMCI. I do not have that in Bookmap. We can take a look at Hero and see what traders are doing. And last time I did take a look at it earlier, looked like it had dropped another 100 points. Traders taking negative delta positions up until about 10:45, 11 a.m. A couple of flow alerts right at the cash open. Traders take negative delta positions, and SMC moves down to the 700 hedge wall, up from above around 800, the key gamma strike, down to the 700 hedge wall. They stop taking negative delta positions. Now it looks like SMCI is trying to recover. All right, S&P 500, again, Hero signal continuing to make a series of lower highs, lower lows. Traders continue to take negative delta positions. Let's go back to Bookmap. Short scalps at the 49.70 level. Let's check NASDAQ. NASDAQ trading just above the QQQ 425 put wall. Large traders have been buying this move down with iceberg orders all day. That's shown by the rising light blue line. On the other hand, aggressive sellers have been selling all day. That's shown by the falling magenta line. Also, sell stop orders have been fueling the move lower as well. So right now it looks like aggressive sellers may want to move NQ down below the put wall. Now maybe acting as support. We'll see. Let's go back to S&P 500. And pretty choppy action in the afternoon. Let's go back to Hero. Check the Mag 7 signal. So it's pretty much leveled off. Sometimes when that happens, I like to go to a shorter rolling window period, a look back period. So this is now looking at just the last 30 minutes of data instead of the entire day's worth of data. So starting around 12:20, traders did start taking positive delta positions. NASDAQ trying to recover. Now that is slowing down. All right, right now in the S&P 500, I'm looking for a reaction at the 49.70 level. Note also the liquidity in the order book. Limit sell orders at that level. Looked like they pulled right before price moved up to that level. Let's go back and take a look at Hero. Go back to the S&P 500. Remember, we're on a 30-minute rolling window period. Hero forming somewhat of a triangle there. Let's go back to the all-day, one-day rolling window look back period. So far the trend is down. And Pharaoh asked, they're not filled at 49.70. Well, we can take a look at that if we zoom in. So it looks like these orders might have been filled. What it looked like to me is they pulled right before, but looking in more closely here, so it looks like some of those limit sell orders were filled. All right, so now they're trying to break above 49.70. Still waiting to see what happens at this level. So again, acting as resistance. So a short scalp. Well, maybe now they're coming back up and testing it again. But a short scalp would have been good for 2 points there. All right, I'm going to go ahead and wrap it up. Remember, tomorrow FOMC minutes come out at 2 p.m. That will be in the middle of my session. So wherever I am at 2 p.m., I will stop. We'll take a look at the S&P 500, see if there's any reaction to the minutes, and then see how traders are positioning themselves in NVIDIA for the earnings report after the close tomorrow afternoon. All right, everyone, thank you very much for watching. Thanks for your questions and comments, and I will see you tomorrow. Thanks again. Bye.